So I've been investing with Fundrise for just about 5 years now, and I'll get to my total returns that I've had with them this whole time. But I just saw something that makes me want to invest more money with them. And I'm going to share my screen and just show you what this is because this is really, really crazy. So I just logged into my account and noticed this right here. I'm going to move my head out of the way so you can see. These are their annual returns for 2022 through quarter three. And this is crazy to me. So the stock market has dropped 23%. Public REITs, which are real estate investment trusts, which are basically just big real estate investments with pooled investors, have been down 28% this year. And meanwhile, Fundrise has managed to return a positive return of 5.4%. This is crazy to me. I was logging in just assuming that we'd be at a big loss for this year because real estate has obviously been pummeled. And so this is just bonkers to me that this is how it's been. Now, like I said, I've been investing with them for nearly 5 years. And at this point, and actually this is going back a few months, my total returns with them have been an average annual return. Again, let me move my head out of the way again. We got an average annual return of about 13.8% since we began with them in, I think it was right before late 2017 or early 2018. Anyway, so I've been very, very happy with that. But I have wondered, how is Fundrise going to handle this once we actually have a downturn in the real estate market, of which we are finally experiencing? And I am just so excited and tickled pink that we're still positive this year. And let me come back here. Let me see. I think there's another screen here showing the, again, so this is their breakdown. I was reading through their letter to investors that they rolled out. This would have been about a month or a month and a half ago now. Something like that, where they broke down these returns that we were just talking about. And so the 5.4% is broken out to 1.67, which is dividends, and then appreciation of 3.73, which is just crazy when everything else is so negative. So that's been really, really interesting to see. And reading through this, I don't know if you've read through any of their letters to the investors, but I really like their transparency. They are just not hype-based, and they do a really good job of just being honest and upfront and saying, because I remember at the end of 2021 when I think I earned like 23% with them for that year, which is just insane, but it was a great year for real estate. And I remember them saying, it's like, these returns, this is not going to be the norm, so just know that. And we had a great year, but this is not the norm. And I just appreciate that transparency because there's so many in this financial services industry where it's all about the hype. And it's like, let's find the one metric and we're going to pretend like this is going to last forever. And it's just not reality. And so anyway, so just reading through this, it was just really nice. I don't know, just getting their honest assessment of this. And I don't know, I've just been really, really excited with them. One of the things that I mentioned in here that I think is worth mentioning as well, they were talking about in the mid-year letter, they stated that they believe the broader Fundrise portfolio is really just a great option right now. And their confidence in this stems from the fact that the Fundrise portfolio is made up of real assets, physical properties, which in contrast to financial assets, derive their value from the utility they provide in people's everyday lives. So they talk about rental housing and how that's a big part of what they do. And that is a basic necessity that everyone needs. And then they go on to say that as long as interest rates stay elevated, the rent versus buy decision will continue to skew in favor of rent. And this makes a whole lot of sense. Like I've looked at some of these numbers and they have a great chart here just kind of showing what it looks like. But the point is, as it becomes more and more difficult for people to buy a house, there's nothing else to do but rent, okay? And so that is actually gonna work in favor of many of us who are Fundrise investors. So anyway, all that to say, I'm just really excited and optimistic about Fundrise right now because I've watched so many other aspects of my portfolio just go down and down and down. And that's not to say that Fundrise won't have a negative year. I think 2023 might be terrible and they still might end up having a negative year. But if they are that far separated from how the stock market has been doing and how REITs have been doing, they're just doing so much better. And if that continues, then it's not, and they even mentioned this in a letter as well, it's not about how much you're going to make right now in a really bad recession, but how much are you not going to lose, and it becomes a defensive thing of minimizing your losses. And so anyway, so I'm pretty pumped about them. And so I just figured I'd make a video, just share that for anybody else who, in case you're a Fundrise investor, might give you some confidence. If you're looking for something to do with your money right now, definitely something to consider. And I'll just pull up this chart as well, which this was another one. I think I showed in another video that I did. But this shows a breakdown of Fundrise's returns since 2017. And again, super, super encouraging. One of my favorite things on this particular chart that I think is so fascinating, and my head's in the way on part of this, but The worst quarter that Fundrise has had has been positive. Now, barely positive, but it's been positive in their worst quarter for the last, whatever that is, 6 years or something. On the other hand, public REITs, their worst quarter has been negative 25. Now it's negative 20. Well, I don't know if that's a quarter. Anyway, worst quarter is negative 25% for that. And then if I can get my head out of the way, the worst quarter for the stock market has been 19%. Best quarter for the stock market has been 20%. Best quarter for REITs has been 16%. And so Fundrise hasn't had as strong of quarters as either of them, but you also haven't lost any money. So for people who prefer to not lose any money and not see things go down, yeah, it's just definitely something to consider. And so, yeah. Anyway, so that's Fundrise. As always, like all of these videos, we have a link down below that'll help support our channel if you go sign up using that link, and we appreciate it. And one of the things that we do that's unique with any of these referral links, because they do send us a cut on it, what we do is we take that money and then we funnel it back into giveaways that we do for you in the SeedTime community. And we actually have one running right now, which I'm really excited about. We're giving away a $1,000 Amazon gift card. And this is just kind of our way of paying back to the community for supporting us and helping us get to do this for a living. Like, we really enjoy the opportunity to, as I always say, experiment with my own money so you don't have to, type of thing. So anyway, we'll have a link down below if you want to do that. And we'll also have a link to the giveaway if you want to get in on the $1,000 giveaway. It's super easy to enter. There's a couple different ways you can do that. And yeah, and I think that's it. Hope you have a great day, and I'll see you soon.